Okay, let's dig into this. You're, sizing up a company, it's heading for its IPO. There's always a lot of buzz, right? But how do you, as an investor, how do you really cut through all that noise? How do you figure out if it's actually got staying power or if it's just like a flash in the pan?
Yeah, telling the genuine article from the hype, that's always the big puzzle.
It really is.
And that puzzle gets even trickier when governments step in with these entrepreneurship subsidies. We're
Right.
talking about R&D subsidies,
Yeah.
trying to fuel innovation, and then these high growth or HG subsidies, which are meant to help companies scale up, expand faster.
Okay, so the idea is to help these promising young companies get over funding hurdles.
Exactly.
Yeah.
Bridge those capital gaps.
Yeah.
But it's not just about the money.
hmm
There's this sort of implicit nod of approval, you could say. When a government gives a subsidy, it's kind of like saying, hey, we think this one might have legs.
Yeah, it's a signal, right? Like an endorsement for investors. And this is where it gets really interesting, I think.
Absolutely. Because the big question, the core question, is whether these subsidies are actually a trustworthy signal of a company's quality. Does getting one mean the company was already great? That's the signaling effect.
Or does the money itself just make them perform better, regardless of where they started? The treatment effect, right?
Precisely. Signaling versus treatment. That's the heart of the debate.
So in this deep dive, we're tackling that exact question using some really compelling research. Do these government thumbs-ups actually tell IPO investors anything reliable? And, crucially, what role does government corruption play in how investors read those signals?
Yeah, the study we're looking at is fascinating. It examined 584 IPOs from entrepreneurial firms in China. This was between 2011 and 2015. And what makes it really powerful is this unique event they use as a sort of lens, the introduction of the 8-point code. It was a big anti-corruption campaign.
Right, the EPC. So this was like a major crackdown aimed at cleaning things up in government.
Pretty much, yeah. And the key thing for the researchers was how it rolled out. It wasn't everywhere at once.
Oh.
It happened at different times across different provinces. So that created this kind of natural before and after comparison.
Ah, I see. So you could compare firms getting subsidies before the crackdown hit their area versus firms getting them after.
Exactly. By looking at who got subsidies and how investors reacted, before and after the EPC kicked in locally, they could really start to untangle this.
Makes sense.
So our goal today is to give you, the listener, a much clearer picture of how investors see these government endorsements, especially when you factor in the regulatory environment. And we'll uncover some, frankly, quite surprising differences between the innovation-focused subsidies and the growth-focused ones.
Okay, looking forward to it. Let's start with that context then, this 8-point code campaign in China. What was it exactly, and, how did it set the stage here?
Sure. So the EPC launched back in December 2012. It was a pretty significant set of rules, and importantly, it was strictly enforced. The goal was to boost discipline within the Communist Party, fight corruption. It wasn't just talk.
It had teeth.
Oh, yeah. The number of officials investigated, dismissed.
Yeah.
It jumped sharply after the EPC came in. Real consequences.
Okay. And you mentioned the staggered rollout.
Yes, that's the crucial part for the study. The very first EPC inspection tour in each province, it happened at different points between 2013 and 2014.
Right, creating that natural experiment setup.
Exactly. So the study could compare, I think it was 424 firms that got subsidies before their province had its first EPC inspection against 160 firms that got the after.
That difference in timing is key, isn't it, for isolating the effect? So how did the EPC actually change things on the ground related to these subsidies?
Well, it basically changed the risk-reward calculation for government officials. The potential downside of, say, taking a bribe to award a subsidy just got a lot higher.
Makes sense. More risk.
Right. And for the companies, especially maybe lower quality firms trying to get subsidies through connections or less proper means, the cost probably went up too.
Yep.
Should it become harder, in theory, for less deserving firms to get that government money?
Okay, theory makes sense. So let's dive into the subsidies themselves. Start with the R&D ones focused on innovation. What did the study find about who was getting these? Did the EPC change the matching?
This is one of the really interesting findings. The study found that the R&D subsidies, they consistently went to firms that were genuinely innovative, high levels of innovation. And this was true both before and after the EPC campaign.
Oh, wow. So even when things were potentially more corrupt, the government was still pretty good at identifying the innovative companies for these R&D grants.
It appears so, yes. The criteria they used, looking at the science, the tech approach, cost effectiveness, commercial potential, the firm's R&D setup, those seem to have been applied
fairly consistently all along for R&D.
That's a really key point. The government matching for R&D was decent throughout. But did investors see it that way? Did getting an R&D subsidy signal quality to investors both before and after?
And that's where the story shifts. The study found investors only started interpreting R&D subsidies as a positive signal of quality after the EPC was implemented.
Only after, not before.
Correct. Before the anti-corruption drive, even though the subsidies were mostly going to innovative firms, the market seemed, well, skeptical, wary.
Huh. So the big takeaway here for listeners is government backing for innovation only really gets believed by investors when they trust the system isn't, compromised.
That's a great way to put it. Even if the selection process itself was okay, investors needed that reassurance that the process was clean, less vulnerable to funny business, before they'd put real stock in the subsidy as a signal. The EPC provided that boost in confidence.
It really highlights the importance of perceived integrity, doesn't it? Beyond just the act of giving money.
Absolutely. It suggests investors are thinking about the process and the environment, not just the outcome of who got the check.
Okay, what about the impact of the R&D money itself? Did it actually cause firms to innovate more later on? The treatment effect idea.
The study looked into that with some supplementary analysis, and it found that the R&D subsidies didn't seem to significantly change the firm's future innovation levels. Not before, not after the EPC.
Interesting. So that strengthens the signaling argument then. It's more about what the subsidy says about the firm rather than what the money does to the firm's innovation.
Exactly. It
Right.
leans much more towards signaling. The value, in the eyes of investors, came from the information the subsidy conveyed, especially once they trusted the source of that information, the government, a bit more.
Okay. And you mentioned something else interesting, the innovation gap.
Yes. The difference in innovation levels between firms that got R&D subsidies and those that didn't. That gap actually got wider after the EPC.
Wider. Why?
It suggests the government might have become even more selective after the anti-corruption measures. Like, with less noise or pressure in the system, they could focus even more sharply on funding the truly top-tier innovators.
Right, cleaner system, maybe more precise targeting. Okay, so investors start trusting the R&D signal post-EPC. What kind of extra information, beyond just patents maybe, could that subsidy be signaling? What's the private insight the government might have?
That's a great question. The paper speculates a bit. One idea is that firms probably share more detailed tech plans and data with officials when applying for these grants than they release publicly. So the subsidy signals that the government, with this deeper look, sees real potential.
Like an insider validation.
Sort of, yeah. And another possibility is that the subsidy, especially post-EPC, signals the government's kind of commitment to that area of innovation, which could reassure investors about future support or a favorable policy environment.
Okay, that makes sense. It's about more than just the firm's current patents. All right, let's pivot now to the high growth, the HG subsidies. These are about scaling up, right? What's the story there?
A very different story, actually.
Yeah.
For the HG subsidies, the study found they only really matched high-growth firms effectively after the EPC campaign.
So unlike R&D, the matching here wasn't great before the crackdown.
That seems to be the case. Before the EPC, getting an HG subsidy wasn't strongly correlated with actually being a high-growth firm. It suggests maybe corruption or perhaps just less effective criteria played a bigger role in who got the growth-focused money initially.
Okay, so the government got better at picking high-growth winners after the EPC improved things. But did investors start trusting these subsidies as a signal then?
And here's the really crucial contrast. No. Even after the EPC, when the HG subsidies were going to firms that were genuinely growing fast, investors did not seem to treat the HG subsidy itself as a positive signal of quality.
Really? Even in the cleaner environment, they didn't value it.
It appears not. Getting an HG subsidy didn't seem to boost the firm's IPO valuation, even post-EPC when the matching was better.
Wow. Why would they be so skeptical about growth subsidies, even when the government seemed to be getting it right?
Well, the researchers suggest a few reasons. High growth.
Okay.
It can be driven by things that aren't sustainable, right? Like a temporary market boom, a fad. It's maybe seen as more volatile.
Okay. Less predictable than, say, having solid patents.
Possibly. Also, growth metrics like sales figures might be seen as easier to manipulate or window dress compared to innovation indicators.
Yeah, I could see that.
And there's another interesting thought in the paper. Maybe getting an HG subsidy makes a firm less hungry. Like, it reduces the pressure to be super resourceful or efficient to achieve that growth,
Yeah.
potentially making the growth itself less
robust.
So investors might be thinking, okay, they grew with government help, but is it real sustainable growth?
Something like that. And check this out. The study also found that the firm's actual sales growth numbers did positively affect the IPO price, both before and after the EPC.
Ah, so investors cared about growth itself, they just didn't trust the subsidy as the indicator.
Exactly. They were like, we can see the growth numbers ourselves, thanks. The government stamp doesn't add much value here. They relied on their own assessment of growth, not the subsidy signal.
Fascinating. And was there a treatment effect for HG subsidies? Did they boost future growth?
Similar to R&D, the supplementary analysis found no significant impact of HG subsidies on future growth. Again, reinforcing the idea that this is mostly about signaling, or in this case, the lack of effective signaling.
Okay, so R&D signals quality post-corruption crackdown, but HG signals pretty much nothing to investors, regardless. That's a stark difference. What about political connections? Did the study look at that?
It did, yeah, as a sort of post hoc analysis.
Yeah.
And the findings were, well, a bit unexpected.
Yeah, so.
Before the EPC, you might expect politically connected firms to grab more subsidies, right? Especially if the system is a bit corrupt.
Yeah, that's the common assumption.
But the study didn't find a clear positive link. No strong evidence that having political ties significantly increased the chances of getting either R&D or HG subsidies in the pre-EPC period.
Huh. That is counterintuitive. What about after the EPC, in the cleaner environment?
It got even more complex. Post-EPC, firms with more ties to the Communist Party actually got fewer R&D subsidies.
Fewer.
Yeah, while firms with more ties to legislative bodies got more HG subsidies.
Okay, that's confusing. What could that mean?
Well, the researchers suggest that maybe, just maybe, in a less corrupt system, political connections start playing a different role. Perhaps less about favoritism and more about channeling information. Maybe legislative ties help signal growth potential better in that context. But honestly, these findings are quite tentative. They definitely need more research.
Yeah, sounds like a whole other deep dive waiting to happen. Okay, so let's zoom out. Looking at the big picture from this study, what are the main implications for how we should think about these entrepreneurship subsidies?
I think a major contribution here is really driving home the difference between the signaling effect and the treatment effect. It shows providing money is one thing.
But having that money and the government's choice actually means something to investors is another.
Exactly. And that meaning, that credibility, is heavily shaped by the regulatory environment. Specifically, how much investors trust the government process, how much corruption they perceive.
So it's not enough to just have subsidy programs. They need to operate within a system that breeds confidence.
Precisely. And the other big point is that not all subsidies are created equal in terms of signaling. R&D subsidies, tied perhaps to more verifiable things like innovation outputs, seem to have a better shot at being a trusted signal if the environment is clean.
Whereas HG subsidies linked to growth, which can be fuzzier or maybe seen as easier to game.
They face this inherent investor skepticism, it seems. Even when the government gets better at picking actual high-growth firms, the signal just doesn't land the same way.
So that government stamp of approval, it's not automatic currency. It has to genuinely convey extra trustworthy information that investors value.
That's the bottom line for you, the listener. Does this endorsement tell you something credible you couldn't easily figure out yourself? If the answer is yes, and you trust the source, it has value. Otherwise, maybe not so much.
Okay, so let's wrap this up. What are the absolute key takeaways you want people to remember from this?
I'd say number one, R&D subsidies can signal quality to IPO investors, but crucially, only when they trust the regulatory environment is reasonably clean. Low corruption matters for the signal to work. Number two, high-growth subsidies seem to face a fundamental skepticism from investors as a quality signal. Better government matching post-corruption cleanup didn't change that perception.
And that's a surprising point. Just because the government gets better at picking good firms doesn't mean investors automatically trust the pick. The improved matching didn't directly translate to improved signaling for HG subsidies.
Exactly right. That disconnect is fascinating. The market needs to trust the process before the outcome. The subsidy carries real weight as an endorsement.
Right. So here's something for everyone listening to think about. If government endorsements can be shaky signals, especially depending on the context and the type of subsidy, what are the most reliable ways for these young entrepreneurial firms to credibly signal their quality to investors? And on the flip side, how can governments design these programs so they don't just provide cash, but actually build that crucial investor confidence?
Yeah, those are the million-dollar questions, aren't they? Thinking through these dynamics is really important for anyone involved in entrepreneurial finance, policymaking, or investing in these kinds of firms in different parts of the world.
Definitely food for thought. And, if you want to dig even deeper, looking into exactly how R&D subsidies manage to convey that valuable extra information, or the specific ways corruption messes with subsidy allocation. There's always more beneath the surface.
Absolutely. Always more to uncover.